Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and we are back with Gordon T. Long. And this is Financial Repression for Dummies. And don't think it doesn't apply to you. It applies to everyone, either directly or indirectly. If you've got any money in any bank, in the market, wherever it might be, even in your mattress, you are a victim of financial repression. And Gordon T. Long is an authority in it. Gordon, welcome back.
Thank you very much, Kerry. Nice to be back. Always enjoy our talks.
Hey, always. And financial repression, well, first, if you're not familiar with what it is, that term, well, Gordon, what is financial repression?
Kerry, I'm not going to give you the academic definition because it's a macroprudential strategy. It would be great academics in Chicago would tell you what it is. I'll tell you what we need to know. Financial repression is government stealing from savers in the future. It's any attempt by the governments to make sure debt service payments remain serviceable. Mm-hmm. And that's what it's fundamentally about. You know, there's only so many ways a government can get rid of its debt. And heaven knows the developed world, the level of debt we're at. We can tax our citizens, and I think anybody over the age of 14 understands taxation. Well, the next level is you inflate. And inflation is really nothing more than a stealth tax. And I think more people are very familiar with that and really how it works. And there's a whole discussion of what inflation really is today. But when you reach another level, Kerry, where the debt to GDP is so large that it cramps the growth in the ability to grow the economy and demand starts to slow, which is what's happening, you've got to unload some of that debt. And the way to get out of that is this proven strategy of financial repression. And it's been done many times before. Sometimes it's successful. But sometimes it's not, because then it ends up in a currency failure. And the essence of it, Kerry, is negative real interest rates. And I think people have a real problem getting their mind around what negative real interest rates are and how, in fact, that becomes a transfer of wealth. And let me repeat that, Kerry. It's not money that disappears. It's a transfer of wealth from savers, pensioners, people who've put this money aside to the hands of the government, leveraged loans and lenders, and the banks. And that's how that money is being transferred. And if you've got anybody that you know that's retired and was planning on getting 6 and 8%, and you know what they're getting now, you know that the huge amount of money they thought they were going to get disappeared, right?
Sure.
Well, it effectively didn't just disappear into thin air. It was transferred. And it's being transferred through debasement to the future revenue streams of the government that will pay them in a lot less money, a less valued money. Because the fundamental problem people have is what we believe money has value. Well, money doesn't have any value. There's no store in money or currency anymore because we're a fiat currency. So if you debase it, it's an illusion. And that's what it is, a money illusion. So what is wealth? How do you store your value? How do you store your wealth? And once you get into that, you understand the real essence of financial repression, because it's stealing your wealth, not your money, your wealth, through debasement of the currency. I don't know if that was simple enough, Kerry, but it's a war on savers and pensioners right now, and it's an ugly war.
So we look at the functions of money, medium of exchange, a store of wealth, a store of value, if you will. And so by financial repression, it effectively retards one of the key functions. And there's other functions of money as well, portability and divisibility and all that. And then, we look at that and it's killing one of the primary functions of money.
Completely killing it. Money as a media of exchange is still working because there's a level of confidence that if you have a dollar, somebody else is going to accept that dollar. Where the illusion is that you're not getting a dollar's worth of value that you would have got a year and 2 years ago. Everybody knows that. We call it inflation. But what is inflation? And by the way, the governments are all running around saying we need higher levels of inflation. Since when is inflation good for the average person? Isn't deflation better, Kerry, if prices are going down? But everybody, no, we need more inflation. Why is that good?
Yeah.
Well, it's good. It's only good if you're a leveraged borrower, and you're living off leveraged money. But if you're a saver, it's great if it's deflating and making your money worth more. Inflation's the worst thing that can happen to you.
Right.
So the governments are doing this by the store of value and the negative real interest rates, but it's more than that, Kerry. That they put a ring fence around your ability to do things to protect yourself. Through regulatory controls, the free movement of money, the interest rates. Look, we dropped them right down now, so that if you're a pensioner, and you need 2 or 4 or 6% to barely get by, the risk that you now have to take to make that kind of money is something a financial advisor would have told you never to take. So it forces you much higher up into the risk curve, and much higher levels of risk. And the whole basis of risk is that sovereign debt, government bonds, are supposed to be risk-free. Well, they're not. We have so much mispricing of risks now and lack of price discovery that we think these bonds at these low rates are risk-free. They're not. There's phenomenal risk with them. And so it forces us to get higher yields, which again is even incrementally higher risk. Kerry, and the risk in the bonds is not that you won't get the face value of the bond back from your muni or your government. It's the risk is in the currency. It's in the paper that's being transacted in. And it's a very tough problem because if you're just in the United States, you don't see how your currency is being debased relative to other currencies. And usually you see it against something like gold. So suddenly when this happens, gold prices go through the roof. Well, this is part of ring fencing. And so another part of a financial repression is elimination of warning signals such as gold appreciation. So you have this disconnect between paper prices and real hard value of the gold bullion. That's all part of the suppression to force and limit you of what you can do with your money. And the bottom line of what they want done with the money is to pay the debt and finance the debt of the country. And it's the only way out, Kerry. It's not really a solution because at some point we lose confidence in the currency.
Right.
And right now the 95% of the world's currencies are transacted through 4 currencies. I refer to them personally as called the currency cartel because it's the euro, it's the yen, it's the sterling, and it's US dollars. I mean, talk about debts. That's the world's debt. And those 4 countries are debasing their currencies together. So it's hard to see it relative to each other unless you denominate it in gold or silver, and then you get into the games or commodities, etc. But that's the game that's going on right now, and it's a race to debase. You just saw what happened in Japan here on Halloween, which was absolutely shocking to the rest of the world.
Sure. And so by virtue of this, then they have to put a cap on gold and silver, then, don't they?
Oh, absolutely. So what happens is it's not just gold and silver. It's anything that inherently has a store of wealth and can store value. So, and it just turns out because of the limitations of gold and silver that it's has been for decades, centuries, that it's a good store of value. So, but it's the enemy of a fiat currency. It's the enemy of any government that wants to print more of this paper. Because it's called it relative to what? And gold and silver will maintain its value, and it does. It becomes the enemy. So you've got to figure out some way of not having this rush out of paper into something like gold or silver that will store it. And right now, if you look at the level of manipulation that's being forced into the gold and silver of driving this down, we're gold prices now are below the production cost. That doesn't make any sense. But if you get outside of this currency cartel, Kerry, the rest of the countries are buying gold hand over fist. You've got China now stating they want to have 8,500 tons on, and Nick Bereshoff at BMG Gold Bullion, one of the biggest bullion dealers in the world, he believes they're already at 5,000 tons. I mean, these are phenomenal records. Russia can't buy it anymore. Brazil, I mean, all of the countries are buying and accumulating India, these central banks are accumulating gold. Why? Because they have to protect some level of the store of value of their currency exchanges. And they're buying them, they're holding them in their sovereign wealth fund.
Yeah, and my theory is that every bank in the world, every central bank or major one is buying. They just aren't talking about it.
Oh, without question. And it's the games that are being played. When I was talking to Nick, and I says, how could you possibly suggest that China's got 5,000 tons? I happen to believe he's totally right, but I was curious on the mechanics of it. And he said, Gord, he says, it's very, very simple. The gold is actually bought in China in the sovereign wealth fund. And if you look at the reserves, the currency reserves, the unallocated numbers are just growing through the roof. Allocated being whether it's in US dollars, euros, et cetera. So why is it so large on these particular countries, the unallocated? Well, it's because it's held within sovereign wealth fund. And the sovereign wealth fund says, well, look, we got it in a lot of stocks and bonds and mixed things, so we can't tell you. It's unallocated. Well, that's where the gold is. The gold is in there, and they don't adjust those books. I think the last time that China did it was 5 years ago, and suddenly 1,000 tons kind of appeared here. But where the gold, I mean, there's a lot of accounting that's done around the world that says how much is produced, how much is sold, et cetera. So how it's hidden is the central banks lease out their gold. Well, when that lease comes back. But Kerry, how does the gold actually come back? Because it's hanging around somebody's neck in India. I mean, but it was leased out. Well, when it comes back, there's a netting that goes on, and there's swaps. Well, in that netting, it turns out that gold is not there. It's never returned. But in the netting process, it's then therefore transferred effectively going into the wealth funds. And you can see that when you look at the total gold that's produced in the world, how much is being sold, how much is transferred. There's a big gaping hole there. And eventually they'll adjust the books, and then everybody will know that that's where the gold actually is. But there's no question that they're buying it. I mean, the Chinese, the Russians, et cetera, have been very, very clear. So the question is, why would they be buying at such a phenomenal rate, and why aren't gold prices going through the roof? And silver prices. And I'm not trying to pound gold and silver here, Kerry. That's not I'm just trying to say they're representatives of a way of having a store of value. There's many ways of having store of value, but there's a war that's going on right now.
And when we come back, we will talk about what you do about it, how you capture value so that the government can't take it away from you on the Financial Survival Network.
FSN Radio. It's all about what's next.
People have been using gold and silver to protect their wealth for thousands of years. Shouldn't you? That's why I go to Cloud Hard Assets. Tom Cloud has been in the business for 38 years. Call him now at 800-247-2812. Tom's service is outstanding, and you can buy with complete confidence. Order today, and you'll have your metal in your hands in 10 days or less. Tom takes the guesswork out of what to buy, and you'll buy at the lowest possible prices. And as a special to FSN listeners, you'll get free shipping and insurance. So call Tom today at 800-247-2812. That's 800-247-2812, or find him on the web at cloudhardassets.com and tell him Kerry sent you.
The Financial Survival Network. It's all about what's next.
And if you just joined us or just tuned in, we're talking with Gordon T. Long, authority on financial repression for dummies. Actually, if you've tuned in, you're not a dummy. You're actually ahead of the crowd. And Gordon, so you define the problem. So you're a doctor. Okay. So doctor does a diagnosis, but if he can't give you a prescription, he's pretty useless. So you've got 2 weeks to live. What are you going to do?
Exactly. And you have to do something, Kerry.
Yeah.
You've got to take action. This is not something that's going to go away. Financial repression we're only at the very early stages of these kinds of policies that are going to become more and more predatory, more and more usurping our freedoms of what we want to do with our money. And therefore, we're going to find inflation eating away at our assets and our return on even a non-adjusted in nominal terms becoming more and more difficult. So you've got to start deciding what to do and the strategies to adopt. And it's to get it into, as I've said earlier, things that are clear stores of value. Now, we've been interviewing people all around the world on some site called the Financial Repression Authority.com. And these are people who understand financial repression and have been looking at solutions and services and ways of protecting. And they come in all sorts of shapes and forms. A lot of it's a function of the country you live in, what kind of freedoms you have of moving your wealth offshore. And I'm talking perfectly legal, but the restrictions, because they're closing them so quickly and so fast and so aggressive. That's what the G20 meeting in Australia was all about, was how to lock even more of the doors.
Yeah.
So
how do you keep the suckers down on the farm when they've bought a Krugerrand?
Before the show, I was talking to Tim Price in London, who's a true authority on this. And I says, Tim, one of these days somebody's going to yell fire in this theater and they're going to really get the message and they're going to be running for the door. And he says, Gord, that's not the problem. He says, they've barricaded the door. The problem is the only way you're going to get out is you're going to have to exchange your seat for somebody who's not yet in the theater. And I says, Really? He says, and how many takers are you going to get on that one? That's the problem. So if your investments today are in that theater, you might as well burn the paper. And that's the war, is the paper. Currency is a confidence game. And we learned about Bernie Madoff, what happens when there's a run on the paper, right? And so you've got to be in real store of things that have this store of value. And it's just not gold and silver. It's not just farmland. It's not just
diamonds.
Diamonds or precious, pieces of art, antique cars. It's anything that people believe have wealth in it. And the essence of it, I've always defined it as discounted free cash flow. In other words, it continues to generate money going forward, irrelevant of inflation and depreciation that's going on. So it's that future cash flow. But it's getting to be a little trickier than that, because wealth today is a better way of saying it's what people want. If you've got something somebody else wants, you actually have wealth. We just happen to use currency to exchange this I want and you're willing to give to come up with it. But at the end of the day, the paper, it isn't really of any value. It's you want what it's going to get. So where the wealth is that desire. What are people really going to want? Well, when things get really tough, our wants get pretty, Maslow's hierarchy of need, they get pretty low. I want safety, I want food, I want shelter. But as we have a higher standard, our wants become, well, no, I want a house and I want
Picasso.
Picasso. And so,
as Mercedes.
So right now, our store of value of wealth is at a higher level. But as the global demand is slowing at such a rate, because the global engine for demand has been the U.S. consumer, the middle class, which has been completely gutted. We're a 71% consumption economy that's now stalled, which is stalling the rest of the world. So suddenly money, and we watch money velocity absolutely falling, lack of investment because we have so much overcapacity. And now, and then you've had these carry trades that are now starting to reverse. So the bottom line of it is that wealth ladder is starting to shift. And you have to study that wealth ladder to say, what are people going to believe is wealth a year from now, 3 years from now, and 5 years from now? And people have all sorts of solutions for that.
Could be a shrimp cocktail in 5 years, That might be, and a lobster could be the equivalent of a diamond ring right now.
It could be one meal.
Yeah.
It could be turnips. It could be potatoes. If we were into something that let's call was a very serious global depression. I'm not trying to say that's
we're not scaremongering, but
no. I'm saying I'm just trying to paint the scenarios that can unfold. But somewhere in there, is a realistic kinds of levels of what you have to start buying insurance for. That's the better way of looking at this. You don't want your house to burn down. You're terrified of it, but you buy insurance to make sure if it did, you're protected. Well, with financial repression, you need to start looking at insurance policies against the debasement of the currency.
Yeah,
and there's
insurance.
all sorts of people, Kerry, that have really clever, legal, well thought out strategies that are spending a lot of time. They just don't happen to be running around advertising them in the newspapers. That's all. And you've got to go and you got to find them and listen to some of our tapes. The people will lay them out exactly how to diversify their assets, deep valued equities, and et cetera, how to do. But they're all different, and they depend on your country, your location, your aversion to risk, how much fear, or how big you think the concerns are. Some people would say, I don't think it's that serious. Well, that defines your risk strategy, right?
I think you need layers, really.
Precisely.
Because it all depends how bad things get, and nobody knows how bad they will get. There's always the possibility that the world will come to its collective senses before it gets as bad as it could get. Will it happen? I'd like to think so, but don't really know. We can only pray, but, Well,
when I was back in school, we used to do things called decision trees, and used to say, well, if it goes here, this is the probability. Well, but if it goes here, here's the next layer. You could call it layering. So I think you need to have gates, and you need to say, look, this is my strategy at this level, and if I start to see signs that says it's getting more serious, then here's my next level. But so it starts to say, I know what I'm looking for. I know how I'm going to measure it. And that's the level of thinking you need to be doing with your financial planner today. And by the way, you better get a financial planner who truly knows what's going on, because
good luck on that one. But
that's the problem.
Help.
They've all been trained in Keynesian economics, which is not working. They've all been drilled into this, buy and hold. That's all right if you're not debasing the currency, then they're stored in the value. So the rules are changing because the government is changing the rules on you. So you need somebody that understands how the rules and regulations are being done, because a lot of them, Kerry, they're not even broadcasting them. The way you find out is you're sitting there with your tax accountant and you go, pardon?
Yeah.
When did they do that?
Hey, and hey, we're going to have to wrap up, but we need to continue this discussion because it's so important. It could get to the point where it's really existential, and these are the kind of things that you need to know about. So, Gordon, just tell us website.
Gordon, come at GordonTLong.com. We have a YouTube channel, and I would strongly recommend FinancialRepressionAuthority.com, another site that we've launched to carry just on this subject, and we thought we'd post information. We're so overwhelmed with data and information that's coming out, we're having troubles. We underestimated how aggressive government policies are right now. Yeah. And the collusion that's going on.
Oh, it's shocking. Anyway,
it is shocking.
You'll find the link to Gordon's site on financialsurvivalnetwork.com. And, really, you got to survive the repression. And don't forget, sign up for the newsletter, free webinar coming up on November 25th, 9 p.m. Eastern Time. And make sure you sign up for that, because we're going to talk about strategies that will help you survive financial repression, give you an idea exactly what's going on now. And Gordon, can't thank you enough for coming on. It's always a pleasure to have you.
Thanks for having me, Kerry. Talk to you again.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.